Have a good time today. Congressman Williams is unable to be with us, so you're going to hear from the three of us. My name is Colin Hanna. I am president of an organization called Let Freedom Ring, and it is our initiative that you see the handouts on the seats for Sunset the Tax Code. I'm going to make the case for sunsetting the tax code as we go through this discussion period, but let me lay out the basic premise here. And that is that the current tax code is unfair and inefficient. Is there anyone in this room who doesn't agree with that? I would also argue that if it is unfair and inefficient, it is inherently immoral, because it doesn't treat people fairly unless they have access to the kinds of lobbyists and lawyers who put in all the loopholes. I will give you three different lengths of the tax code. The current tax code, in the shortest form that I know of, that is in virtually agate type, produced by the government printing office, is over 2,500 pages long. If you go to the Let Freedom Ring booth downstairs, you will see another version of the tax code that is over 4,000 pages long. And in both cases, we're talking just about the raw legislative language. We're not talking about any history, any footnotes, any explanatory text, any cases, or anything like that. The form of the tax code that is used most widely by practitioners, accountants, tax lawyers, and the like, is the form that is produced by the Commerce Clearinghouse. That is in readable type with places that you can make notes and so on, and that, ladies and gentlemen, is over 70,000 pages long. Now, I would argue that there is no way that anyone can understand what is in 2,500 pages, 4,000 pages, or 70,000 pages. You simply cannot do it. Therefore, as it has grown, piece by piece, loophole by loophole, special interest by special interest, it has gotten to the point where it is not only truly unfair, but it must be replaced. Now, we're all in here to talk about tax reform. We are taking as an assumption that the current system, for one reason or another, doesn't work and it should be replaced. Most people believe it should be replaced by a system that is simpler and fairer. There's a fair amount of disagreement as to whether the base for that should be on consumption, such as the fair tax, or whether it should be some form of a flat tax on income, such as has been proposed by Steve Forbes for a number of years and a few others. And I understand we may be seeing a new flat tax proposal from Senator Rand Paul in as short a period of time as the next week or so. The point that I am trying to make is that at this point, there is no critical mass between those two opposing alternatives. Neither one has truly captured the public and has achieved 60, 65, 70% support. I believe that if we start from the current tax code and we don't have a clear consensus on what kind of replacement we ought to have, that we will probably stall out and never really get the job done. What I am proposing with Sunset the Tax Code is that we pick a date certain at some point in the future. I'm picking December 31st, 2019, but that's subject to some adjustment if need be. But a date certain that is both far enough into the future not to cause concern within the financial markets due to uncertainty, and close enough to the present to prompt genuine action. So our proposal is to sunset the current tax code and then, prior to that date, replacing it with something which is simpler and fairer. I believe, therefore, that it sets the stage for the debate on what the alternative ought to be, rather than arguing about little pieces of it here and there and trying to nibble away at the existing tax code. So our position is intentionally agnostic as to whether the replacement should be flat or consumption-based, or income or consumption, flat or fair. Because I think that what I want to do is let that debate take place in a context of reality, Otherwise, the current debate has a way of sort of going nowhere. It never quite no one side sort of quite gets ahead, and there's never enough support to really do anything. And it's my conviction that even a reform-minded leader is still going to be caught up in all of the muddle and muck of the current tax code, that we're far better off to clear the decks and have a completely blank slate be the point of departure. Not everyone, not even my two co-panelists here, fully agree with me on that, so we'll have an opportunity for us to engage in some discussion on that, and then we very much want to have you involved. So please, if you've come here with your passions and with your own beliefs, your time will come and come very soon, because we're very interested in hearing your reaction. The first person to speak to us today is going to be Ryan Ellis, who is the Director of Tax Programs at Americans for Tax Reform. Ryan is one of the most knowledgeable, most intelligent, and I would point out to you, warn you, fastest thinking people that I think I have ever met. There are plenty of times when Ryan thinks faster than I can listen. I'm not sure that that isn't going to be the case for you as well, but perhaps the rest of you are faster listeners than I am. But Ryan is nothing if not deeply and thoroughly informed about this issue. Ryan's going to lead off, and then he's going to be followed by Lou Uhler, who is the head, longtime head of the National Tax Limitation Committee, and he has been involved since the Jarvis days in California with Proposition 13. And he understands the dynamics of tax limitation, how hard it is to get government to, in fact, determine what size of revenue stream is necessary. He's done some pioneering work on attempting to try to find the right size of government. Is there a sweet spot between too little taxes to provide the service that taxpayers want and too much in the way of taxation that actually holds back the economy because it drains its lifeblood from it? So Lou has some ideas of his own, but he's also got an absolutely rich background on this issue, and his whole project on the right sizing of the federal government is something that if you haven't heard it before, you will find fascinating today. So let me begin by inviting Ryan Ellis to speak. You can speak from there or here as you wish, Ryan. And would you please welcome Ryan Ellis and Lou Uhler to this session. Thank you.
Okay, is this on?
It is.
Alrighty.
Are you?
I'm on. I'm always on. All right, well, thanks for coming out on the latter half of a Friday afternoon to come to a tax policy panel. That means you're my kind of people. That's good stuff. I like it. I've worked at Americans for Tax Reform since 2004, so I've been there for quite a long time, working for Grover Norquist. And I have to say, I never thought I'd be competing against Grover on a panel when I'm on the tax panel and he's on some other panel, which I thought was pretty funny when I looked at the schedule. But there he is. He's a couple of rooms down. I wanted to start out by trying to sort of look at the way that conservatives think about tax policy. And I want to suggest that we start thinking a little bit with a fresh and clear perspective. We've had a number of decades now where people have fought over, I'm for the fair tax, I'm for the flat tax, I'm for some sort of a consumption-based tax, or I'm for this type of. And what I would suggest is that we've leaned on these kind of what I would call out-of-the-box solutions for a long time. And whenever you do that for a while, it's important to take a step back and take a look with fresh eyes at the situation as it stands and to see where we want to approach this intelligently as conservatives. What worked when, for instance, Hall Rabushka wrote the flat tax book in the early 80s and then republished it in the mid-90s may not make as much sense today. Same goes for when the fair tax was first developed in the late 1990s and early 2000s. Some parts of it may make perfect sense today, some parts of it may not. Things change. Our economy is dynamic, our society is dynamic. So the first thing I would urge people to do if you're interested in tax policy and you're concerned about this is to start it as if you were starting it from the beginning and learning things from the beginning
From
Because-
the beginning.
From the beginning.
What a radical idea. You mean
From
like
the-
from a blank slate?
From a tabula rasa. And we start from there, and you take a look at the data. You take a look at this freshly. All right, and the first thing I would say, and so in the course of that, I've tried to do that myself over the last couple of years. I'm an old, dyed-in-the-wool, flat tax, Holrobushka guy for years, and I was frankly getting challenged on that by a lot of people and saying, well, what about this, what about this, what about this? So I took a look at where I think the current situation is as far as the way our tax system looks today, the size of government today, what we want to do in terms of the way we want our tax system to look going forward, and came up with some conclusions that I wanted to share that have at least informed the way I've been thinking about this and hopefully can get your juices flowing and can kind of get some of the questions going with here. The first thing, tax rates matter a lot, but not the way you think they do. Tax rates matter in terms of, oh, we should probably defer if he's got a flight.
Terrific.
Yeah.
You are very welcome. We thought you were not going to be. We've been voting, I understand that. I understand that.
Would you like to
Well,
go?
please-
If you have to catch a flight, you better.
Please welcome Congressman Roger Williams from
Thank you.
Texas.
No, I'm
Do you-
fine. We don't know when we're going to vote, so I'm fine.
All right. Well, welcome.
Sorry I'm late.
Congressman Roger Williams, not to be confused with the founder of my state, Roger Williams. who I'm sure you know.
Nobody's confusing us.
Nobody's confusing it? All right. So the first thing I would suggest is that tax rates do matter quite a lot, but they don't matter in the way that is conventionally believed. Certain tax rates matter a lot more than certain other tax rates. So for instance, our business tax rates that we assess on both corporate and non-corporate businesses are the highest in the developed world. We literally have the highest business tax rates on the margin that are assessed in the entire developed world. So I would suggest that's a very important tax rate, and that's one that we should focus on. Another very important tax rate is our tax rate on capital gains and dividends. We have a top rate on capital gains and dividends today of 23.8%. That's extraordinarily high. That's high by any recent historical standards. I would suggest that that tax rate matters. A tax rate I would suggest that does not matter nearly as much as those other two is the top marginal tax rate on wage income and other labor income. That's 39.6% today, plus another few percentage points for FICA. All the economic literature suggests that taxes at that level, if they were to be, let's say, cut significantly into the 20s, would not give you a significant pro-growth effect. They simply wouldn't. Those also happen to be very, very significant costs in cutting that, both under a static and a dynamic analysis. So you would really put yourself in a hole revenue-wise if you were to cut the top rate on labor, let's say from where it is today, around 40%, into the mid-20s, and you wouldn't be picking up a whole lot in terms of economic growth for doing so. So I would suggest that that's a less efficient use of tax cutting, given that we can't do absolutely everything we always want to do. We are living in a world of political constraints. So the first thought I would share is that tax rates matter, but you have to take a look at this rigorously. Which tax rates matter? Which ones are going to give you the most bang for your buck in terms of growth? Second thing I would suggest is that full business expensing is extraordinarily important. In fact, I would call it the killer app of tax reform based on where we are starting from today. Little explanations needed on that. Let's say you're a business and you buy a computer. The IRS says if you're a large enough business, you cannot simply write off the full cost of the computer that first year. You have to slowly deduct or depreciate that computer over, it turns out, it's a 5-year window for a computer. It's a 39-year window for buildings. There's a ridiculous number of arbitrary depreciation tables that basically force business owners to slowly deduct capital investments rather than deducting them in the year of the purchase. Almost the number one thing you can do, maybe competing only with cutting business tax rates, is to move to full business expensing. If it's not part of a tax reform plan that you're advocating for, then it is leaving the most pro-growth thing you can possibly do on the table. Full business expensing is absolutely essential. Getting the international part right is absolutely essential. This isn't the 1950s, this isn't the 1970s, this isn't the 1990s. We have not only a very internationally competitive business environment, our businesses themselves also have a capability as never before to shift their capital overseas. So we are competing on a global level for jobs and capital and economic growth. And we have to make sure that we don't double tax our own international income, as we are doing today. It's absolutely essential that we move away from a worldwide system of taxation to a territorial system of taxation. Next thing, the economic baseline matters a lot. Are we looking at current law, where we assume that all of the tax extenders are expired forever? Or are we looking at present policy, where we assume that the tax extenders are made permanent forever? Believe it or not, that's a huge difference. That's a difference of around a 0.5 percentage point of GDP over time. And if you're looking at a revenue-neutral revenue target, it's awfully hard to do that if you don't have the baselines aligned. It's very wonky, it's very dorky. You're going to have to read a lot of CBO stuff. You're going to have to read a lot of that junk that you probably don't want to read. But if you're going to do tax reform, the baseline matters a lot. Related to the baseline, scoring conventions. Paul Ryan's very, very big on this on the Ways and Means Committee. Static scoring simply means that you're ignoring the macroeconomic effects of major changes to tax policy. If you do some of the pro-growth things that we've talked about in the tax system, you're going to have faster GDP growth, higher rising wages, higher capital stock for businesses, and it's going to throw off more federal tax revenue in those revenue feedback effects. Doesn't mean tax cuts pay for themselves, doesn't mean you can cut taxes anyway and they're all going to have the same revenue feedback effects. But you know what? If you do these things, it's going to have an effect. And that's why you have to have a dynamic analysis of tax policy if you're going to have this be at all a rigorous way of looking at it. And finally, the last thing I would suggest is everything I talked about is great. We're talking about lowering tax rates for businesses. We're talking about full business expensing of capital investment. We're talking about territoriality, moving from worldwide to a territorial tax system. That's what you need to do in order to get the growth quotient of our tax code where it needs to be. Also, I'd throw in there killing the death tax, 0% capital gains and dividends rate, all that double taxation of capital that you want to do. What I haven't mentioned anywhere in there is what do you tell somebody who makes $87,000 a year and is raising a couple of kids, how have you cut his taxes? I didn't mention it anywhere in there at all, did I? Now, we need to do something about that. If we're going to have people be invested in this pro-growth tax reform that we want to do, we have to say, look, that person that you're raising your 2 kids, we recognize that your FICA tax liability is probably bigger than your income tax liability. We recognize that by having kids, you're shoring up the Social Security and Medicare systems going forward, but at the same time, you're not getting any recognition for that in FICA. We understand that. Something has to be done either on the FICA side, maybe the child credit side, something to recognize that families with children have to buy into this. And I'll prove it to you that this is not anathema to supply side. When President Reagan ran for office in 1981, he could have run simply on cutting the top marginal rate. The top marginal rate at that time was 70%. His initial tax cut brought it down to 50. He didn't run on that. He ran on an across-the-board rate cut. So everybody's tax rate went down by 30% was what he ran on. He could have just run on the top rate going down if he wanted to be purist supply-side top rate only. He knew that Joe and Jane Lunchpail, that he wanted to vote for him, needed to have some skin in the game in this, that it needed to be their tax cut too. And so I would suggest that smart electoral thinking in terms of how we're going to shape tax policy has to be put in here as well. So I'd put all that together. Love to take questions afterwards and get into some take action items if we have time at the end.
Great. Thank you, Ryan. Congressman Roger Williams is in his 2nd term in Congress from the state of Texas. Prior to that, he served as Secretary of State under Governor Rick Perry. Prior to that, he was involved in the finance committees of both the George H.W. Bush and George W. Bush campaign, but his real livelihood for most of that time was running an automobile dealership. So he is somebody who comes into politics and policy from the business world. Please welcome Congressman Roger Williams.
Thank you. Thank you, Mr. Chairman. I appreciate it. Can you all hear me all right? Am I on? Yes. I think so. Listen, first of all, I apologize for being late. We've got some business going on over there, as you know, but I'm really glad to be here. Real quick about my background, as you heard, I'm a business guy. I'm somewhat unique in Congress, and in fact, I still own a business. I still sign the fronts of checks more than the backs of checks. I still have a payroll. I still have employees. And I've been in business a long time. A business that we have is 75. We're celebrating our 75th year. A family-owned business this year. Good for you. And I've been in it 44 years. Now my daughters are in it, 3rd generation. I'm really proud of them. But I tell people, I've been through a lot of ups and downs in the economy, but I tell people that if you weren't in business from September of 08 forward, you haven't been in business. I mean, I borrowed money at 20%. We remember those days. But I'm telling you, from September of 08 to now, it's hard. You can read about Wall Street doing great. I don't know a lot of the Wall Street guys. All I am is a Main Street guy, okay? And I can tell you, Main Street America is hurting. Main Street America is not back, in spite of what this president says. Main Street America is playing defense every day they get out of the bed. because they don't know where they are on tax reform. We don't know where we are in health care. We don't know where we are on energy, so we play defense. And so one of the things that has prompted me, I'm one guy. I'm the guy you've been waiting on. I've got the fix. I can fix America.
Let's go.
Okay? And, you know, I fix it from a practical standpoint, and you heard a lot of what I'm going to say from right here. But here's the deal. I can tell you, being in politics, it's not a very well-run business. And if we're not going to cut expenses in America, like I have to do every day, like you have to do every day, moms and dads and grandpas and grandmas have to do every day, then the only thing left is to cash flow America. Now, we've tried 0%, it doesn't work. We tried stimulus, it doesn't work, and I believe we're trying socialism, and it doesn't work. And the last group of people, the last people to empower to cash flow this country are all of you in this room, or small businesses, or moms and dads and grandpas that can take some risk and get rewarded. That's what built this country, risk and reward. And so I believe what we've got to do to get the country going, and let me say this, I'm tired of hearing revenue neutral in government. Is there any business that talks about revenue neutral? If you did, your shareholders would fire you immediately. So we don't deal in revenue neutral, and dynamic scoring is all of a sudden a new concept, which we do every single day in business. We try to better ourselves. So what I'm saying to you is, if we're not going to cut expenses in America, we need to cash flow America. I'm going to just quickly tell you what I think will turn our country around from a small business standpoint, and I mean turn it around tomorrow. I'm not worried about deductions. Unlike a lot of tax proposals you hear, they say, well, I'm going to lower you to here. Oh, but by the way, I'm going to take this from you. Well, you know, small business like me, we think we're guilty till proven innocent. Turn me loose and let me realize the American dream. So here's what I propose. It's called Jumpstart America. We've been going all over the country this the last 6 months, and it will work whether your name is Gates or whether your name is Williams, it will work. We pick no winners and losers, okay? First thing we do is we propose to cut the corporate income tax 20%, across the board. Across the board. Now, I'm not worried about deductions. Let's cash flow America. Next, what we propose is to cut the personal income tax to 20% on the first million, 30% on everything over $1 million. Now, I'm one of those that believes we talked about capital gains. I believe capital gains should be 0%. I believe dividends should be 0%. But I'm going to tell you, I'm a salesman. It's hard to sell 0. So let's bring it back down to 15, cap gains and dividends. We know it works. Let's bring it back down to 15 and get going from that point. Let's cut the payroll tax in half, not only for the employee, but for the employer. You cut the payroll tax in half, that's that much more money the employee is going to have every other week when they get paid or weekly. And I, as an employer, it's that much less. I've got to match. Well, all of a sudden, the less that I got to match, what is it? It's cash. It's cash. It's profit. I pay more tax on it. I have more cash. I go expand my business. I hire somebody. I get them off these phony unemployment rolls that we hear about. I can take some risk again. Cut the payroll tax in half for the employee and the employer. And then let's do away with the most unfair tax there is anywhere in the world. America designed it. America has it. It's called the death tax. It's called the inheritance tax. Most unfair tax there is anywhere in the world. We have studies that show if we do totally away with the inheritance tax, we add 1.5 million jobs in America. People say, how does that happen? Well, it's pretty simple. If you're like my family, you're putting money away each month for when the kids need it or the grandkids. Or maybe you've decided you're going to get an insurance policy, okay? So if you don't have to pay the insurance premium, you don't have to save the money, you can put your money in your business, in your family, give it to your church, and create net worth, and pass net worth on to your family, which is the American way, I believe. And then what we have to do is we have to reach out and we have to, all the money we got overseas we hear about that our companies have made over in foreign countries. The president, as you know, wants to tax, I think, at 40%. Nobody's going to bring it over.
That's right.
If they have to do that, they're going to sell their companies, and we're going to lose even more jobs in America. How about repatriation at 5%? Yep. Not on a holiday, but every single year repatriate that money. I would only say to the ones bringing it over, don't declare dividends with it. Put it in people, put it in infrastructure. Well, you know what? I've been to Wall Street. They will do it. They've actually said, we'll do it at 15%. Let's do it at 5%, not a holiday. That's real cash. Forget about printing money. This is real cash, real stimulus money we can put in our economy. So repatriate that money at 5%. And then let's 100% depreciate our fixed asset purchases, like you talked about earlier, and allowing me to buy a truck, to buy a computer, do whatever, and write it off the year I buy it. Now, what that does, Mr. Federal Government, I write it off the year I buy it, I don't have any depreciation next year, so I make more money. I pay more taxes, or maybe I do it again and buy another truck, buy another computer, and keep putting people to work. So, and then lastly, we keep a method of accounting called LIFO, last in, first out. The auto industry uses it, manufacturing uses it, energy sector uses it. It's based on an inventory value, but there's $40 billion out there in LIFO reserves that this administration wants to go out and get and tax at 40%. Well, that's going to break small businesses that have LIFO carry forwards. So we preserve LIFO accounting. So look, it's called Jumpstart America. It's one page. Let's try it. Let's empower the greatest asset America has. And you all know what that is. It's Americans. And we need to empower people to take risks, be rewarded, let me make money. I'm telling you, if businesses make money, they don't save money, they spend money. It's the way it works. You hire somebody, you expand, you take risks, you get rewarded. Now the thing about, and I'll close, the thing about repatriation at 5%, I can't tell you, I don't go anywhere that people say, what are you going to do about all those jobs we lost? Well, you know what I'm going to do? I'm going to repatriate at 5%, and those jobs are coming back. Right. And how about the jobs that were never here? They're going to say, we can go to America now because they're friendly to margins and profits and shareholders and jobs, and we're going to get jobs we never had over here. So that's how this works. It's simple. You've heard it from me. You're hearing it from people on this panel. And I can tell you, as a small business owner, I'll get all my shareholders together. I'll get my family together, and I'll say, you know what? We can expand our service department. We can buy another courtesy van. I'm going to go out there and hire 2 more mechanics, and I might just hire a few more salesmen to see if I can sell more cars. That's the way it works. But right now I'm playing defense, and I'm not hiring you unless you're on commission. And that's the reason our unemployment rolls are so out of whack, because small business has no incentive to hire anybody. And there's 52% of the college grads that are going to graduate from any school in America this year are either going to be underemployed the next 2 years or unemployed the next 2 years, because business like mine, I can't hire you because I don't know what the rules are, and I'm scared to death of federal government. So anyway, I would just say in closing that the way to get our economy going is much like we're talking about, Jumpstart America. It's just a name I have for it. It will work. Let's try it. And let's, as I say back home in Texas, our Secretary of State, let's do business.
All right.
Thank you very much.
God, you're refreshing.
Yeah. Hey, is that good?
This is Ronald Reagan reincarnate.
All right.
All right. Let me just throw out a few ideas, because I think you've heard the essence of a darn good tax plan. And I want to start not with phasing out the code, where we'll kill the code and replace it with the congressman's program, but I do want to abolish the IRS. And this is not just an issue of taxes, this is an issue of restoring the separation of powers. We made the mistake in 1862 when Lincoln asked for a income tax to fight the Civil War. Congress created the Internal Revenue Bureau in this Treasury Department, and that's where it's been ever since. Yet the Constitution says explicitly, Congress shall lay and collect taxes. When the 16th Amendment was passed, it said Congress shall lay and collect income taxes, all right? Now it's time that Congress restored its authority and instead of asking Lois Lerner to come and testify, you fire her, all right? And that's the way it ought to be working. Furthermore, if you have the Congress directly responsible for collecting the taxes, they're much more sensitive to the constituents in terms of tax problems that they have. And furthermore, this helps to do what we must do department and agency by department and agency, and that is fire the administrative state and restore a constitutional structure. We need to do this with the EPA, with the IRS, and with OSHA and the rest of these agencies that have created an administrative state not unlike that in France and Germany, et cetera. And that is not what the founders intended. Number 2, tax reform is absolutely essential to maximizing economic growth. And if there's anything that we have allowed to to die in this administration, it is the rate of economic growth. We're growing at maybe 1%, 2%, 1.5%. If you grow a nation's economy at 3.3% for 20 years, you double the size of the private sector. You double the size of the economy. When Ronald Reagan was president, one of the years he was president, economic growth was 6.8%. During his 8 years, in the face of cutting income taxes, federal revenues doubled from $500 billion to the first $1 trillion amount for America. So tax revenues are directly related to the size of the economic pie, and the growth of that economic pie is directly dependent upon the way in which you extract the funds and the level at which you extract them. Colin mentioned that we've done some work on the right size of government. When Ronald Reagan was governor and president, and I had the pleasure of working with him when he was governor and helping define the tax and spending policies of California, and then a federal amendment with him in 1982. The key thing that he believed in was limited government. But we had at that time no objective standard for what limited government is. Over the last quarter century, a body of knowledge has developed worldwide called the optimal size or right size of government. And it concludes as follows. Anytime a nation taxes and spends more than 18 to 20% of the GDP, you have gone beyond the growth maximizing level for that. And there are several of our good friend economists, Rich Vedder and others, who've written and say if you go beyond 15%, or more precisely, you don't need to go beyond 15% and still have the right results. Where are we today? We're at about 23% of GDP at the federal level. State and local brings it to about 35%. Then if you add the $1.9 trillion of regulatory burden imposed on our economy every year, we're at about 45%. We're double or more than double where we should be if we're going to have the maximum growth, the maximum opportunity, maximum number of jobs, highest level of pay. This is what's happened in country after country that has actually experimented with reducing its size. New Zealand, Ireland, Canada. They've all, during the time that they've made these reductions, had explosive growth of their economies. So that is absolutely key to the future. And as the good congressman has said, we must kill the death tax. We must stop double taxation, and that's one of the key double taxation elements. When Bush saw to cutting the capital gains tax to 15%, it produced more revenue at that revenue source, produced more revenue at 15% than at any rate higher than that. We don't know for sure what the break-even point rate is on capital gains, but we think it's probably about 10 or 11%. But because it's a double taxation, we should eliminate it anyway, as well as kill the death tax. And Jim Martin and many of us, 60 plus, and the work you're doing and your knowledge of what it does to family-owned businesses. As a matter of fact, you want to talk about the defensive activity of small businesses in response to the death tax. We estimate that small businesses spend about $13 billion a year buying life insurance to insure around the adverse impact of the death tax on their business. That's a dead weight loss to our economy. Does nothing to advance our economy at all. Now, in this publication that we've handed out to you, on pages 16 and 17 are two articles that Peter Ferrer and I have done. One is on abolishing the IRS. The other is converting the tax code to essentially a consumption tax without changing the tax code. We cut out all kinds of rules, regulations, multiple pages, et cetera. But rather than having to repeal the 16th Amendment, to adopt a fair tax that Leah Lindbeck has urged out of Houston, which is very thoughtfully done and a very good concept, but without having to do that, all you have to do, as Ryan has suggested and the congressman has suggested, is the way in which you expense the income that you receive. And if you, as individuals and families, if you take off the top anything that you invest, save, put in your IRA or debt reduction, take that off the top, and then apply the tax rate, whatever it might be, to the rest of your income, then you are directly taxing consumption because that's the income you consume. The same with businesses, corporations, et cetera. If you immediately expense and do not depreciate over 10 years or 20 years or whatever it may be, the capital equipment and savings of the company, then you have taken off the top the money that is saved and invested, and you are taxing only the consumption aspect of the business. And that's what you'll find on page 17. Now, interestingly, the key to understanding how these things really work is the method of so-called scoring. The congressman has mentioned dynamic scoring, or I think Ryan did, dynamic scoring versus static scoring. Now that we have Paul Ryan as chairman of the House Ways and Means Committee, and now that we have our old friend Orrin Hatch as chairman of Senate Finance, we have a real chance for the first time in 30 years to change scoring methodology. One of the new rules of the House was to change that method and adopt dynamic scoring. And I think that the Senate is going to do the same thing. So the tax proposal that I've outlined to you, which you find on page 17, was scored recently by our friends at Tax Foundation, Inc., Scott Hodge and Steve Enton. And they have developed a magnificent dynamic scoring model. We went around to various of the key staff people in both Ways and Means and Senate Finance a month ago and laid this out. And they have scored our proposal, and after 10 years, why it has explosive growth for America. So the dynamic scoring makes all the difference in the world, and all that represents is just common sense scoring. It says if you cut a tax, somebody's going to probably produce more. And they've figured out how it does. And they've also calculated that if your tax cut is in the form of a tax credit, that is much less powerful in terms of economic growth than if you expense capital expenditures and business expenditures or personal savings and investment in that way.
Right. We're going to have to cut it there.
Okay, one final point, because it's so important. On the front page is balanced budget amendment effort at the state level. We have 24 states. We need 30. We had 24. We need 34 to force Congress to call an amendment convention. A week ago Tuesday, we got South Dakota, and we're halfway through Utah, Idaho, and Wyoming as of today. Okay, so we're making progress. We need 34, and that will provide the tighter shoe on the Congress, but we have to work tax reduction and spending reduction to fit that fat shoe into the tighter, fat foot into the tighter shoe that will be created. So,
very well.
A few thoughts.
Thank you, Lou.
Thank you.
And now it's your turn. We've heard from 4 different perspectives on this very large issue. We want to hear yours. Who would like to address a question to one or more members of this panel? Yes, sir. Would you identify yourself and where you come from, too, please?
Sure, absolutely. My name is Scott Reagan. I'm originally from Atlanta, Georgia, but now live here in Maryland, work in D.C. And I'm a former constituent of Congressman Paul Woodall and Congressman John Linder. I wanted to ask Congressman Williams about if there are elements of the fair tax that could be incorporated into a new solution once Congress has fixed the existing tax problem.
Yeah, I think at the end of the day, fair tax, flat tax is certainly better than anything we've got right now. We need to go in that direction. But as we've heard, I think You know, the fair tax, I think, is the way to go at the end, because like we heard, it's consumption driven. It drives the economy, and it's inflationary too. I mean, bigger numbers, it works. So, but I would think that we'd probably have to have, we'd probably have to have an issue with the 16th Amendment, wouldn't we? So we don't have a you know, continue to grow our numbers and so forth. But I would certainly be for it. It's a way to go. But I think the Constitution, it will come into play. We'll have to address that.
Another question. Yes, sir.
Let me respond to that in this way. If you add a new tax, a value-added tax, federal sales tax, et cetera, a lot of people fear that unless you repeal the 16th Amendment and the income tax, all you're going to have is 2 or 3 taxes instead of 1 tax. And so that's why using the current code, changing it in the way we've outlined, is a simpler way to achieve a consumption-based tax than going through constitutional amendments.
Well, for the record, your consumption-based tax was actually an income tax that is taxed on the portion of income that is used for consumption, which is a very subtle but nonetheless important difference between that and a true consumption-based tax, which is collected at the point of sale.
Yeah, no, you're right.
Yes, sir.
Yep.
Everybody, my name is Sam Wallace. I'm a University of Maryland student, and I work for a Maryland senator on the State Budget and Taxation Committee. This is directed at Congressman Williams, but anyone can answer this question. Looking at some of the repatriation holiday bills that are from Congressman, particularly Congressman Delaney's Partnership to Build America Act. I know you talked about the 5% repatriation that doesn't have, it's not a holiday, it's permanent.
Right.
I couldn't agree more with that. But what is your stance, or what are your thoughts about just having a limited time repatriation holiday, particularly the PBAA? Is that going to work, and if so, what are the impacts of that?
Well, I guess what I'm saying is the reason I don't say a holiday is because why do we want it to be a holiday? We should do it, it should just be part of what we do in business. Now, I'll carry it further. I think the repatriation of those dollars is important. One of my committees was T&I. Now you get in the Highway Trust Fund. I'd love to see repatriation go in the Highway Trust Fund. It's real money. It runs with inflation, and begin to build our roads and bridges back. I mean, you can carry it that far. But a holiday, to me, it's a holiday. It's limited. I mean, we've got a lot of money overseas. People generate money overseas. They want to bring it back. This will allow them to do it, and with those exceptions I had with dividends and so forth.
Here. Yes, sir, in the back.
Bob Michael, South Jersey, one of the, I think, 2 states that have both a state tax and an inheritance tax.
Congratulations.
We're losing people, yeah. I love the idea of the sunset. However, I will believe the only way it's going to work is that congressmen, 2 houses of Congress believe they can actually get something done in 4.5 years. It won't go for the voting into the sunset until they actually get told to do that. And since the fair tax and flat tax ideas have been kind of stagnated, I'd like to get people an idea that that's going to actually happen.
My argument is actually almost the opposite of yours. I thank you for your question. I believe that unless you create a sense of urgency, then the serious debate and the ultimate resolution will never happen. So the purpose of the sunset is to say you must have a replacement tax system by this date, which would probably be 6 months before the sunset, so that you're not surprising the market at the end. So I believe that that's the catalyst that produces serious policy consideration. Otherwise, it'll continue to be a kind of esoteric college bull session that never actually produces new legislation and a new code. Next question. Yes, sir. I'm sorry, you said you...
My name is Roland Turbino.
You said you're what from a...
Solutions architect for a large...
Solutions architect? Gracious, we need you.
But anyway, I'm not a tax expert, but I just feared that the 17 and that Obama's out of office and 20 trillion debt. How is the tax reform going to help bring down that debt?
Only by making it part of the priority. That's one of the reasons why Mr. Uhler is in favor of one variety of a balanced budget amendment. There are other varieties of a balanced budget amendment that that tie in a specific maximum of debt to gross domestic product.
There's a very interesting number that the Congressional Budget Office puts out that, and I'm probably getting this slightly off, but for every 0.1 percentage points in higher real GDP growth over a decade, you end up with approximately $100 billion in higher tax revenue over that decade, derived purely from growth. So if you were able to get, let's say, I'm sorry, it's actually higher than it used to be. It's, if you do a full percentage point, so if you went from, let's say, 2.5% growth, which we're at, historically, to 3.5% growth, or where we are today, 1.5% growth up to 2.5% growth, which should be easy. We should get about $2.5 trillion in higher tax revenue. So 1 percentage point of higher GDP growth gets you $2.5 trillion of higher tax revenue over a decade from growth alone. And if you want to take a look at why we had surpluses, let's say in the late 90s, and we're paying down the debt during that period, it's not because of anything we did on spending. Yeah, there was some good stuff there. Mostly, it's because we had explosive economic growth, and it threw off pro-growth tax revenues. So yes, you have to control government, but it's yes and. You control government, and you make sure you grow the economy fast enough so that this giant American machine is throwing off enough tax revenue.
And if I can jump in here for just a second, that's also why, from a political standpoint, we should be talking about growth, not jobs. There are two different ways to create a job. You can create a job in the private sector, you can create a job in the public sector. It is easier and faster to create a job in the public sector, but it does not create economic wealth. It is not, in fact, growth. It is something that is only sustained by ongoing application of tax revenue. That's why Congressman Williams is so right when he talks about jump-starting the economy. We must focus on growth, not jobs, because if we talk just about jobs politically, the other team can say, well, we've got a jobs program too, and furthermore, we're going to create more jobs faster than you are. No, we should be talking about growth. Growth produces jobs that can be sustained by the economy because they're involved in wealth creation.
Right on.
Yes, sir, in the back.
My name's Steve Allen, and I'm a farmer from Iowa.
Great.
One of Steve King's constituents,
Terrific. Welcome.
and he's made a believer out of me as regards the fair tax. And taking a few steps further beyond what we just talked about here, taking that system and using that one policy measure, the fair tax, to actually not only eliminate the IRS, but eliminate the Department of Health and Human Services. In other words, doing our welfare, or doing our revenue collection, our welfare type of activity, and even other possibilities exist. Even making our health care, giving a credit, as he has explained, that we give credit to poor people, paying certain things being exempt, like food, clothing, and so on, but also administering a welfare type program through the,
Well, you're basically saying everything from the fair tax.
all in the
right.
main structure, under the main structure of the fair tax.
Here-
Anybody give any further thought to how that might work, other than the theoretical concept?
I love the fair tax, but I have two big problems with it. One of them is, in order to avoid it being regressive, it includes a so-called prebate, which is given to everybody at up to a certain number of dollars of income. And I'm afraid that that makes people think positively, think kindly about regularly receiving money from the government. I think it actually fosters a subtle but dangerous kind of dependency on the government dole. That's my number one concern. My second one is in those areas of business where government and private industry both supply the service, such as trash removal. You can have a municipal trash removal, or you can have a private sector trash removal. Under the fair tax, the municipality would be paying a tax if they went outside and privatized their trash collection, They would not if they did it internally. That's a slight overstatement because of the things that they would buy, like trucks and whatnot. I don't think that that's a good idea. I think it has a tendency to actually, an unintended consequence of tending to grow government in those areas where private industry also supplies the same good or service. Anybody else on fair tax?
I would just sort of say something.
What's our timing here?
Fast on this, which is, I've worked in tax policy for a long time, and I work on the Hill all the time, with the committees of jurisdiction, with members, with senators, and it's simply never going to happen. It's just not. And I would urge that if you're interested in tax policy and you're interested in making positive, constructive solutions, you take a look at some targeted ideas like we're putting out here. There was a question earlier that you asked that was a very good idea, which is, what of the targeted ideas you guys have been talking about move us in the direction of the fair tax? That's a much better way to look at this. The fair tax has no death tax, right? The fair tax has full business expensing. The fair tax has no double taxation of capital gains and dividends. Those are all things that the Venn diagram was overlap between doing this in an incremental way and holding out hope for the fair tax, which I'm just telling you is not going to come in one step. It's just not going to. So I would suggest that a positive and constructive use of time, energy, labor, and attention, if your goal ultimately is the fair tax, is to work on some of these constructive incremental solutions that you're hearing from us today. Why? Because then we're actually a lot closer to the fair tax that you want to achieve. But if you don't do that, if you say, well, I'm not going to work on any of that incremental stuff because I'm going to hold out for this fair tax that I want to get, you are absolutely never going to get anywhere.
We are actually out of time. I don't think that there is another panel in this room next, so I'm going to take one last question and then encourage you to come forward and speak to members of the panel. I think I'm right. There's nobody following us in this room. Is that right? Oh, I'm going to do two more questions because I recognize one of the questioners. Go ahead, sir.
So you getting out this weekend? Or you still?
I'm originally from California, now live in Virginia. One of my concerns, obviously, I believe in small government and reduced taxes and that. But I think one of the errors the Bush administration erred on was reducing the number of folks that actually pay taxes. So much has become a them and us type deal. Why we're all in this together. And why I don't like seeing aimless taxes go up. I think that if the taxes were a little bit, or the pain was felt across the board, twice isolated to the more successful people, you'd probably have more interest in how big the budget was, what the deficit was, and where the country is headed. Thoughts?
Let me just say, I'm one of those that thinks everybody should invest in our country.
Right.
Greatest country in the world. Everybody should have skin in this game.
Yes.
And that's why I think what we've all talked about, in my case, 20 and 20 and 30 and so forth, it's across the board. Everybody will pay. And of course, what happens, you should get more revenue. You get people like me, employers that will hire more people because of what we've talked about. But everybody should pay in America. And the problem is we're creating generations of takers and no makers. And they're learning how to beat the system rather than work within the system. And that's a problem we've got right now. And I'm one of those that everybody should pay. I think the things we've talked about can begin to get us there.
Yeah, I think that's right. Any number of surveys have actually shown that even among people who are right now not paying any tax, they prize and value fairness over their own self-interest. If they know for sure that the system is fair, that there aren't people who are hiring high-priced lawyers and lobbyists to create for themselves loopholes that the average person doesn't get, then they will pay tax if they think the system behind it is fair.
And I would just remind that FICA is still out there. Just because you're not an income taxpayer, and you have, like you said, about 47% of households don't have an income tax liability, most of those 47% have a FICA tax liability. And for most households that are under a certain sort of middle-class threshold of income, their FICA liability exceeds their income tax liability. That's why Congressman Williams' plan to cut the FICA rate is a smart way to go at this. It begs the question, how do you cut taxes or get people involved in tax reform if they don't have an income tax liability? Well, one way to do it is to take a look at their FICA tax liability. Another part of that, though, is we have an aging society, so you have a larger and larger cohort of people generating into being over age 65 or over age 70. That's a period in your life where you're not going to have a lot of income. So it's natural that you're going to have some growth in those that don't have an income tax liability. But it is important to have an integrated sense of this. Take a look at FICA, take a look at the distributive effects of the corporate income tax down the chain. All those sort of things are important to keep your eye on as well.
Yes, sir, back there.
Yeah, Christian Callahan, Westchester, Pennsylvania. Mr. Hanna, the sunset, the tax code, I imagine a lot of industries have grown up as a result of the increasing size of the tax code. So who are those groups that may oppose such a measure to start over?
Well, I suspect that some soon-to-be unemployed IRS agents would probably oppose it, and a fair portion of the tax preparation industry would oppose it. In the latter case, those are clever people. They can find other ways to earn a fee-based income. They might even get involved in wealth creation rather than calculating taxation. So frankly, I'm not terribly worried about them, and I'm not particularly sympathetic to the revenue agents who might lose their jobs. So the answer to your question is there are some, and so be it.
Yeah, and we have to, with respect to the death tax, we have to have a counterforce to the life insurance industry that is quietly lobbying to keep it because of the huge amount of life insurance to buy around that death tax.
Exactly. The inefficiency of the death tax and the unfairness of it requires the inefficiency and unfairness of life insurance to pay for it.
Yep.
And the shame of it is if you don't have life insurance, which is the shame of this thing, if you don't have life insurance, in many cases, you lose the family farm.
Yep.
Yep.
Or the family auto dealership.
Or the family auto dealership.
Please, yes.
My name's Colin, and I'm from Kansas City. And Lou, you mentioned about Congress taking over the position of the IRS. I guess, and Congressman, I mean no disrespect to you, but we have as a grassroots activist, I think that the people have lost faith in Congress doing much of anything that is productive. And it seems like every time you all meet, well, we get in more trouble. And that's not you personally, sir, at all. But I guess I don't see Congress stepping up and taking that role and having the fortitude to actually take that role in taking the IRS and actually collecting taxes. Please address that.
Well, everything you said is right. But I think, of course, not defending anybody, but we have cut the IRS's budget. I mean, we have done that. Now they've become victims, if you've listened to that. And all of us are going to get all the refunds we're going to get, they're going to be late because they don't have enough people. But, I think the IRS is a rogue agency. The IRS should be abolished. How Congress is going to fit into that, I can't really say. But there's a lot of us that want to do the right thing, and everybody, certainly on the Republican side, would be for finding a better way and a quicker way to get the IRS out of our lives. We are a little disjointed right now. There's no question about it. But I think that we agree on everything. We just have to find a way to get there.
Please join me in thanking our panel, Ryan Ellis from Americans for Tax Reform, Congressman Roger Williams, Lou Uhler, American National Tax Limitation.